It finally happened. After years of being locked out, Bitcoin and Ethereum are now approved for your ISA and your SIP. The headlines are everywhere. But hold on, before you log into your trading app and dump your £20,000 ISA allowance to buy Bitcoin, you need to stop and watch this video. The UK's financial watchdog, the FCA, has performed a massive U-turn, and HMRC's rules have created a game-changing opportunity, but also a complicated and dangerous trap for investors who don't read the fine print. Today, I'm breaking down exactly what you can buy, the huge risk you are not being told about, and the bizarre innovative finance ISA twist that could force your platform to sell your investment in April 2026. And at the end, I will tell you my personal strategy and why I am continuing to use eToro for now and waiting until at least April 2026 to make a decision. Let's get into it. First, let's be crystal clear. This new rule, which took effect on October 8, 2025, does not let you buy US-style spot Bitcoin ETF. The FCA is still banning those for retail investors. What we can buy are called crypto asset-backed exchange-traded notes or crypto ETNs. And for now, they are limited to only tracking Bitcoin and Ethereum. So what's the difference? It's critical you understand this. An ETF, like the ones in the US, is a fund that buys and holds the actual Bitcoin. You own a piece of that fund that owns the asset. An ETN is completely different. It's a debt security. Think of it this way. You are lending money to an issuer like BlackRock or WisdomTree. In return, they promise to pay you an amount that tracks the price of Bitcoin minus their fees. This introduces the single biggest risk, counterparty risk. If the institution that issued your ETN goes bankrupt or defaults, you could lose all your money. It doesn't matter if Bitcoin's price went to £1 million. If the issuer fails, your investment can go to zero. This new crypto ETNs are physically backed, meaning the issuer holds the real crypto in cold storage as a collateral. But this doesn't change the legal fact that you are holding an unsecured debt note. But here is what really shocked me about this rule change. And it's the warning you must understand before investing. Your investment in this new crypto ETN is not covered by FSCS, Financial Services Compensation Scheme. If the ETN issuer goes bust or if the Bitcoin crashes to zero, FSCS will not compensate you. You stand to lose your entire investment in this product. This is critical because most UK investors are used to protection. Your bank deposits protected up to £85,000. Many investment products are protected, but crypto ETNs, zero protection. What's even more worrying is that the FSCS research shows that as many as 1 in 5 UK crypto investors incorrectly believes their investments are protected. They are not. The FCA has tried to manage this by classifying the ETN as restricted mass market investment. This means platforms must make you pass an appropriateness test, show you prominent risk warnings, and enforce a 24-hour cooling off period for first-time investors. But these are just speed bumps. They don't change the fundamental fact you are on your own if things go wrong. And this brings me to why the FCA even allowed this in the first place. To understand why this approval is such a big deal, we need to go back to January 2021. Back then, the FCA implemented a complete ban on crypto derivatives and ETN for retail investors. Their reasoning was this product is ill-suited for retail consumers due to the harm they pose. The FCA cited 5 major concerns: no reliable basis for valuation, prevalence of market abuse and financial crime, extreme volatility, and inadequate consumer understanding, and no legitimate investment need. At the time, the FCA estimated this ban would save retail consumers approximately 53 million from potential losses. So what changed? Bitcoin ETF launched in the US in January 2024, creating massive competitive pressure. The UK government, under pressure to make Britain a global crypto hub, sent a letter to the FCA in November 2024 explicitly recommending they prioritize growth and international international competitiveness. The FCS official position now, the market has evolved and the products have become more mainstream and better understood. So let's be honest. This was about politics and competition, not suddenly discovering Bitcoin is safe. Now here is where it gets really dangerous for your money. So if they're so risky, why is this such a big deal? 2 words: tax wrappers. HMRC has confirmed that this new crypto ETN are qualifying investment that you can hold within your ISA or SIP. This means your Bitcoin ETN and any growth you make is completely free from capital gains tax within this tax wrapper accounts. This elevates crypto from pure speculation to a potential part of a long-term tax efficient retirement strategy. But this is a massive but. There is a huge complication for ISA investors. HMRC has created a bizarre 2-stage process. Stage 1, from now until April 5th, 2026, you can buy and hold this ETN in a normal stocks and shares ISA. Stage 2, from April 6, 2026, ETNs will only be allowed inside an innovative finance ISA. Why is this a problem? The IFISA or innovative finance ISA is a niche wrapper originally built for peer-to-peer loans, and the vast majority of major UK platforms like AJBL, HNL, Free Trade, they have publicly stated that they have no plans to offer this kind of a product. This creates what's being called a forced seller risk. Let me show you exactly what this means for your money. You buy Bitcoin ETN today in your stocks and shares ISA on a platform like Trading 212. Come April 2026, the platform doesn't have an IFISA. Under HMRC rules, they must act. They will either be forced to sell your ETN, whether you are in profit or at a massive loss, or they will transfer it out of the tax wrapper into a general investment account. Trading 212 has already warned its client this will happen. This IFISA twist is the single biggest risk in this new framework. For SIPs, the situation is simpler. They are qualifying investment without this IFISA complication. So who's actually offering these products? Let me break down the platform landscape. The big issuers like BlackRock and WisdomTree have all listed product on the London Stock Exchange, and a fee war has already started with some fees as low as 0.10%. But platform access is fragmented. Trading 212 and Saxo are live now. You can buy ETNs in a GIA, SIP, or that temporary stocks and shares ISA. Interactive Investors also has them available in GIA, ISA, and SIP. Free Trade intends to offer them, but in a taxable general investment account only, because they don't plan to build an IFISA. Hargreaves Lansdown, the UK's biggest platform, is being extremely cautious. They said they will wait until early 2026 to even offer them. Each platform has different onboarding requirements, appropriateness test, risk warning, and cooling off period. Now let me tell you what I'm personally doing and why I'm not rushing into this. Look, this is a massive step forward, but for me the risk and the uncertainty are just too high right now. You have the counterparty risk of the ETN structure itself. Then you have the IFISA twist, which creates a potential forced seller event in April 2026. For that reason, I am not buying this new ETN inside my ISA right now. I have also utilized my ISA allowance for this tax year and don't plan to change my portfolio. Instead, I am sticking with my existing strategy. I will continue to buy and hold actual Bitcoin on eToro platform. Yes, it's in a taxable account and I am liable to pay capital gains tax if I sell them at a profit, but I have direct ownership and I am not exposed to issuer counterparty risk or regulatory mess of the IFISA deadline. I have provided my affiliate link to the eToro platform in the description box below. Remember, capital at risk, and this is not financial advice. You might lose your money if you invest in this kind of volatile assets. If you use my link, I might earn a small commission, and this helps me run this channel. My plan is to wait and see what happens as we approach April 2026. Will HMRC reverse its decision? Will major platforms be forced to launch an IFISA? If the landscape becomes clearer and safer, I might then decide to sell my taxable holding and move that capital into a SIP or an ISA. Why SIP over ISA? Because SIPs don't have this IFISA complication. And if you are a high rate taxpayer, the tax relief on contributions is incredibly powerful. And for now, I am watching this from the sidelines. So what should you do? Here is my exact action plan. And remember, this is not a financial advice and I am not a financial advisor. Step 1. Understand the ETN structure. You are taking on counterparty risk. Make peace with that or don't invest. Step 2. Ask your platform what is their exact plan from April 2026. If they don't have an IFISA roadmap, you could be forced to sell. Step 3. Consider SIPs over ISA if you are a higher rate taxpayer. The tax relief is powerful and there is no IFISA complication. Step 4. Don't rush. This opportunity isn't going anywhere. Wait for clarity. Step 5. Do your own research. This video is not financial advice and I am not a financial advisor. Speak to a qualified advisor if you need help. Most importantly, ask your platform what is their exact plan for April 2026 before you invest a single pound. Thanks for watching. If you found this helpful, hit the subscribe button and let me know in the comments, are you buying this ETNs or you are waiting like me? This is Dr. Suman helping you build your wealth one step at a time. See you in the next video.